Okay, let's sort of jump into it. So, pretty interesting sort of end to sort of last week because, of course, we had the NFP numbers. So let me just sort of drag these ones across. Where we are. Hey. Yeah, we had NFP sort of numbers coming out, and it's a bit of a sort of chop fest with this sort of stuff at the moment because really, sort of last month, if this will show us what we were revised down from, it was about 335,000 jobs supposedly in last month's print. So the forecasters were for 198, which obviously was a bit of a drop off in that, which was pretty much expected for them to sort of like sort of move backwards after that. But coming in 275, still very strong print. But the big thing is that the number from last month was revised from 335 all the way down to 229K. Now that's a massive drop off. Like you know, it's I mean, US dollar ripped basically off that number as it sort of came out last time, and then to sort of revise it down, 30%, well, the actual true number being inflated 50% on top of that, depending which way you want to look at it. It's obviously sort of quite a big sort of chop and change with it all, but pretty much as expected with the price action. So sort of have a look at DXY here. I mean, look, you could tell that it was expected to sort of come in a little bit weaker. We gave up that sort of channel that we'd sort of been sort of looking at last weekend. And basically, as soon as it sort of came through there, look, I thought you may have got a little bit more of a hold around this, like these sort of previous lows down here around that sort of 103 or 102.90 area. But even that sort of seemed to sort of chop through and through all the way sort of down. So certainly, if you have a look on the daily looks like it's finding some support down around this level, which is basically in line with where we saw this previous sort of chop area on the way sort of coming up. And this is, I think, very early January for that sort of week coming through there. So there's no sort of real surprise that it did actually find some sort of buyers down here because if you look at this whole move up from the lows as well, we're coming back along the 61% retracement there as well. And as you can see, this isn't a confirmed channel. This is just based off the two highs here, seem to line pretty well with these lows. So this could be an idea of sort of where a channel would have been sort of flowing down. And as you can see, obviously overshot capitulated, sort of came out the bottom side of here a little bit. But it's tried to sort of rally back up there and sort of hold up here into the end of the week. So, I mean, it was still quite a strong number. As to how much you can believe it, well, as I said, last month 330 down to whatever 220 now. So, maybe they'll revise this one down and turn out it was 198 or something. But be that as it may, you got to go off whatever numbers are presented. And we did sort of see it is still quite a strong number. So, obviously you saw some sort of reason to sort of so for the people basically to be buying US dollar down around this level. Apart from the fact it's also, as I said, it's a 61% discount from the most recent highs that we've sort of seen here. But one that I want to actually look closer at is the Aussie because Aussie's really sort of firing up again here. Well, I say it's really firing up. It's come off the lows from last week when we were looking at it through this little sort of little congestion zone here, which sort of gave itself its lower high. And if you sort of saw what I was saying last week, these were the two levels that I wanted to really sort of see price sort of push above. I think we had it marked out, must be on the other chart here. Maybe we took them off. That's all right. But basically, we saw a little bit of a sell down coming into the end of that end of the week. But as I mentioned with these things, the sell down in the last couple of hours of early Saturday morning local time here doesn't really sort of mean much, particularly when you've sort of run, what's this from 78 down here. It's run up nearly 3% in 1 week, like 190 points. To have a little bit of a pullback, you can see here, if we have a look at the fib, that this is really only just kissing into the 23% retracement. So, I mean, it could even sort of see a little bit of a continuation of that late buying of US dollar, sort of come into morning, Monday session. This could give us a little bit of a pushback down here. And again, this is an area that we wanted to see it get above. And this is around, obviously lines up around that 38 as well. If we take this to the top of these wicks here, that could also offer another bit of a position for, to get long on this sort of Aussie move. RSI is looking a little bit overcooked as well. So yeah, I'm expecting sort of probably early Asia session to see a little bit more of a sort of risk off kind of thing. A little bit of sort of Aussie selling down a little bit more, but I imagine that that'll at least come up and retest that 66.70 level, which will give us our breakout. If we look at it, that's if we do get that deeper pullback. But obviously, this is quite a sort of heavy sort of resistance area through here. And this was that time, so it was for about 10 sessions or something, I think it was, a long time for it to get up above here. So the fact that it broke up above here is quite significant. And really, at the moment, this could just be doing its break, back test. If this area holds, obviously, first target is to sort of go back up to last week's highs, which is that little wick high there. And if we sort of see this as a pullback, even if it comes back down a little bit deeper here, basically what you're looking for is that breakout above that wick at 66.70, and then it's on with the move to the top side there. And really, then we're coming back up into another pretty sort of choppy area that we had sort of through. This is sort of like after that sort of first pullback, so again, sort of early Jan kind of thing. So it's making its way back up there. But obviously, people love to sell Aussie, and even as equities have been sort of pushing up high, they haven't been buying it much. So this could also be a little bit of steam coming off, and it's just obviously anybody that's been short through what's this? Basically, yeah, through the second half of January up until now, with the technical stops, they've all sort of been taken out. So yeah, I'm not sort of saying that this move is done yet. I expect, as I said, a little bit of consolidation, maybe a little bit of a pullback, and then once we can sort of get past those wick highs, I'll just chuck an alert on that one there. Yeah, if we can take out those highs there, and you know what I mean, substantially sort of go past it, possibly with a close above that area, I would say that's enough to sort of say that we've got a little bit more in this move, because it certainly was a very sort of hard, sort of unrelenting sort of push to the top side. So yeah, I wouldn't be surprised, particularly with the RSI sort of rolling over and sort of pushing back down here a little bit, that we may sort of see a little bit of early cooling. But if we get back around that sort of round number, I'll be looking to sort of probably add another couple of longs to this move to sort of see if we can at least sort of target that wick high, and then obviously look for the break in the continuation. I'll flip across to gold. So gold, obviously, I mean, everybody's seen gold. It is absolutely smashing, like the top side moves here. So I had a short-term price target of this, like, you know, once we sort of got this breakout here, thinking we could sort of get up around 2,200. And as you can see on Friday night, after the NFP as well, which is quite interesting, it actually got to 21.95. So, you know, basically, if we sort of mark this out, I think this is where we had NFP come through here. And as you can see, obviously, sort of it was a bit of stuffing around. If you're watching it as it was trading, it was up and down. It broke up and moved quite hard straight away. But yeah, once it sort of like started to come back down, it never really sort of failed and sort of came back down to the bottom. So I'll just quickly flip across. You can see with Aussie, similar sort of price action here. Dropped off the first initial print of the data and then just blew up to the top side here. But you know, every time it sort of came back and tried to rally up, it was just a gear down. And actually, as you can see, took out that bottom wick from the NFP print. Gold, on the other hand, and that actually sort of obviously came back down, sold, so followed that same sort of price action. It pushed up and actually took out and made that new high up to 21.95. Subsequently sold down again, yes, but again, as I'll put on this one here, these are the last 3-4 hour sessions of the wick. So, you know, and you're at all-time highs, so you're bound to be seeing some sort of profit taking there. But basically what I'm saying is you can see that sort of from where the NFP was, actually, maybe NFP was actually down here, I think, with the level, because obviously this was the big wick one here. This was where we sort of saw that gold actually sort of finished quite positive above where the NFP print was. So if we flip across, not that I sort of go across too much on this channel, the moves from like the sort of S&P or NASDAQ, you can see these sort of same things. They both pushed up really hard just off the news, but then bang, all got slammed and actually sort of finished quite sort of bear in that sort of little period, quite bearish after the print. But the fact that gold is still charging up to the top side, I think is definitely worth taking note of, because I don't think this is done with its move by far. I think, you may sort of see again some like sort of maybe risk off or US dollar sort of strengthening early in the sessions. I think you might sort of, shake a couple of people, maybe drag in some shorts if we can get sort of, round to maybe those mid 60s. That would be a pretty decent area. You'd probably also be looking maybe around here where people could be putting their sort of stops. So I would be looking for gold to sort of probably shoot down into the mid 60s. If it overshoots, maybe down mid 50s, and then sort of again look to get long, look to target those weekly highs from last week, 21.95. But I wouldn't be surprised, and I'm probably actually sort of going to be sort of grabbing some long positions based on the idea that we're going to be going above 2200. Like anything, look, I could be wrong. This could be melting down and just go all the way down over here. But the fact, as I said, that you saw that when US dollar did sort of strengthen up into the end of the week, that equity succumbed, Aussie somewhat succumbed, not too badly. Like it held up pretty well, it didn't sort of fall over. But, again, it was below where the NFP print sort of came out. Gold, on the other hand, bucked the trend and is still powering on. I mean, if you look at this on a daily, I mean, that's just insane. You know what I mean? We've got that break from this little sort of channel that we were looking at here is what, that's up, 7.5% almost in just over a week. So that's back to Friday's session where we got that breakout there, and we had that high weekly close, high daily close, and it just has not looked back since. So yeah, early bottom wick for the week, could see this, and then sort of powering up. But I could see it's going above 2200 this week. Flip across DXY, as I sort of briefly sort of touched on before, in that we're back down at the 61% here. I don't think this is a recovery. I don't think this is a bottom for it. I don't think anything has really sort of changed that much. We still know cuts are coming. And it sort of seems at the moment that, even though this was somewhat strong data, it's in amongst a sea of pretty weak US data at the moment. And that's really the thing that's been holding up the US dollar. Like it's only sort of been sort of really outperforming the other currencies in that while equities are running to highs, even now while gold's pushing up as well. Gold's obviously having its effect on the US dollar there, but while equities have been pushing up, US dollar has also sort of been holding quite well. But that's only off the fact that they had surprisingly strong economic data time and time again. And compared to the other currencies out there who are all sort of putting in sort of weaker stuff and heading towards some sort of outlook of a sort of recession, now they're on the same even playing field and they're getting the weaker data. And the conversations now are around basically sort of, are they going to have to do something to prevent recession? Like inflation to me seems to have taken a bit of a back seat. Like it's still obviously sort of part of the conversation, but it's certainly not spoken about the same that it was a couple of weeks ago or a month or two ago, where people was just like, inflation, we got to get this down. This is our main sort of thing. They've got it down considerably now. A lot of these sort of major currencies are printing twos, high twos, with 2% being the target. Yes, it's going to be a little bit sticky and it's going to sort of push on a little bit. But I think now the conversation is, okay, we've got it down. We've sort of somewhat slowed the trajectory, even if it is just sort of stalling around these levels, at least it's not getting worse. Well, US was up a little bit last print, but, up 0.1% or something like this, something pretty sort of somewhat insignificant. But what we're sort of seeing now is they're sort of them sort of having a talk of like, okay, if we don't cut rates at some point, okay, yes, if you cut the rates, you've got the chance that inflation may sort of push up a little bit more. But at the same time, if you don't cut rates and you keep holding them at where they are, and the data keeps on the sort of trajectory that it's on at the moment, you are going to sort of force some sort of level of recession. And it's basically what's the worst of the two evils. At the moment, it sort of seems like, okay, well, they're talking about cutting. I reckon that they'll at least test the waters with it. Maybe not in the next month or two, but maybe so, around sort of May, June. Don't quote me on that. That's just saying that it's coming somewhat soon, next couple of months. And then obviously, you need to sort of see then what happens to CPI, what happens to PPI after these kind of things happen. And if that sort of flares back up, well, obviously there's your answer. And they're going to go back into holding for a little while. But I do think they're going to be at the forefront. I think that's still part of the conversation. And because of that, I think the US dollar is still going to be coming down a little bit further.
I think we do have a little bit of a push up coming early, as I mentioned, but as far as I see it, I would have liked to, if I was a dollar bull, at least sort of hold around this sort of 103 area, 102.90. It's sort of pushed right down. It's come down the bottom here. I would see maybe a push back up into, as I said, maybe low 103s before we sort of see somewhat another sort of push back to the downside. And that, as I said, it lines up with how I said you might sort of see a bit of an early push south on Aussie and gold as well before things sort of correct and sort of continue on their sort of on their basically south move. Okay, flip across. We got copper. Copper is a frustrating one with this copper. The comeback here, the rally. I mean, you can see this. This is 1, 2, 3. This didn't quite get there, so I can't recall that. But that's its fourth touch up of this zone in since November. And it's coming back very strongly when it does. But of course, we know that the sellers are here. Like we've marked it out a bunch of times, and here they are again. So what you sort of take away from this is two things. One, that obviously the sellers are there and they're doing what they're doing. They're pushing it back down. Two, once this level goes, it is going to be a super strong support area. Like you got to think that everybody that's trying to sort of sell copper down, everybody that's sort of trying to get short on it, they're going to be sitting like here because they've survived four very strong rally attempts up into this zone, and they've managed to overcome them and sell them down each time. Once eventually we see that they're depleted and we see that the price moves up past that level there, then you're going to be looking for a lot of those people. Not only do you get the sort of short stops and that get triggered and then pushed to the top side, you're going to get that people that don't quite bail out. They'll be waiting for their chance to sort of get out for even if it does sort of come back. And this is why you have your back test kind of things. We'd see a breakout like this, come back down here. All the people that were short that didn't just get stopped out sort of through this move, they're like, oh, sweet, whatever, we got it wrong. Minimize the loss with it all, and they'll start closing their shorts again. That'll give you the second push up there, and that's when you're going to be looking to see whether we're going to be seeing, a sort of continuation to the top side or not. But I still think that, if we can get past this sort of 10, I mean, realistically, I'd like to see it at 4,000 here. But if you can get past sort of the 398 or so, I think that'd be probably the sort of the trigger to sort of say that, okay, we can start looking at this next zone up here, and we start looking to sort of, 4.15 and that kind of level subsequently along there. As it is at the moment, though, you do have what is potentially lining up for, what have we got here, a little bit of a negative divergence, which obviously, let's make this one here, there we go. We've seen the second push up here. We didn't get the follow through on the RSI here as well. So that's something to sort of take note of, because if this does sort of come back down here, particularly if it takes out these lows at the sort of 383 level, that would be your sort of failed continuation breakout. And then obviously that is going to be quite dramatic, and you're going to be coming back down along here. And realistically, we could almost then just be looking at this, just a big, long, ugly range, just moving back down. So I'd say if we sort of clear this one because it makes it a bit choppy to see, but if we come down through past this level, if we get a close down under here, I would say that that's pretty much it for this top end effort. And then we're back with the sellers in control, and we'd be looking back down around about this 3.72, so called 3.73, basically this level down here. That's where we'd be sort of going for. So I don't think it's done yet. I still think it can sort of push out to the top side here. As I said, I think this will run in line with Aussie sort of pushing up a little bit more. It'll run in line with US dollar selling off, with the sort of Yuan selling down, or US dollar against the Yuan selling down. So I do think we have a breakout coming. 4 attempts up the top up here. They can't have a lot more ammunition up the top up here. You just keep hammering on this level, eventually it's going to sort of pop through. But as I said, for now, you need to stay above this level here, this 3.82 level. If you can't stay above here, then, close your longs, wait for it, retry as you get back down to this 3.72 level. And finally, we'll have a look at China, just doing its thing, back into a grind. I mean, look at this. This is the same thing that we had around this top zone over here. Not quite as far, but it's been within 0.7% for, since middle of January. Like it's just really back and forth, back and forth. Every time you sort of like, if you were looking long on this, you'd be go, okay, yep, sweet, breaking out, we're going, but it's just not coming. And as you can see, this one here, we're not seeing a lot of buying pressure sort of through this area here at all. Well, actually, so it was moving up a little bit here, but you know, comparatively of where we've seen it previously, it's not even passing that 50-point mark. And it's come down to the bottom here. So for this, you'd be looking at putting your stops just above this top level over here to sort of say that, okay, you might be seeing so. Again, I wouldn't be sort of like too quick to be buying this up because we do have higher levels of resistance over these two sides here. But certainly we can tell that this is an area where the buyers are happy to sort of step back in with it all. So this is more of a short-term range that we'd be sort of looking through. I'll get this out of the way, clean up. I'll figure these off. But yeah, certainly I think if we can get down a close down under here, then we'd be going for that larger move down towards the neckline, which is this large head and shoulders that we've been looking at for. I mean, this is going back to October, I think, that we first started calling out this as a potential. And look, it's played out so far. Came back down here, made it confirming the neckline very well. We've got the right shoulder sort of grinding its way out, kind of over here at the moment. So I think that's for me that's the trigger. If we can get through there, we can be looking at the sort of the test of the neckline, which then could sort of be a major sort of breakout to the downside. But yeah, so that's pretty much it from me. Coming up this week, news-wise, we've got a couple of decent bits of news in there. We've got US CPI coming out 11:30 on Tuesday. I'll pop this across. Yeah, so we got CPI coming out 11:30 p.m. That's local time with what are they looking at? 0.3. So they're looking for a slight tick up on CPI month on month, core down, so the opposite of it all, and just a general year on year remaining flat at 3.1. So I think this will be a big sort of driver. So you may not see too much movement through Monday, Tuesday with CPI, because CPI is one of those, I call it second tier bits of news in that, because the top tier ones really are, I mean, just your rate decisions, like nothing else sort of matches those. But your NFPs and your CPIs are definitely sort of market shaping bits of news and data sort of coming out. So coming in even there, I think that'll be telling. I think sort of if this comes in flat, if we don't see an increase, I should say, so if it comes in flat or under, then I think you've got to look at sort of the other bits of data, which, as I said, have been quite weak of late for the US, which is sort of leading more into a bit more of a dovish sort of stance on things. And as I said, we could see a bit sort of, that would, for me, would sort of confirm a little bit more sort of US dollar weakness coming up. Short of that, not much on the Aussie front in terms of data this week. I mean, you got little bits of here, low stuff. Yeah, you got business confidence on the Tuesday. A little bit of China data out, nothing too major on the, that's actually a whole week long kind of thing. Moving forward, Wednesday, again, looking pretty flat. Thursday, we have got PPI and retail sales for US, again, 11:30. We've got, that's why I'm like, there's a bit of an odd time for the data coming out, isn't it? We've got, I'm sure the daylight savings ends this week, doesn't it? Or for somebody, they're sort of flipping, or we're flipping. I'll have to look into that, but I'm pretty sure we've got a little bit of a change of times coming out this week, so that's certainly something to look at. And there we go. To finish off the week, we've got Empire State Manufacturing. So all these bits of data at 11:30, typically for even up until this week, it would have been set for coming out at 12:30. So everything seems to have sort of flipped down an hour. So coming out is just a week earlier, coming out an hour earlier. It's a little bit late in the week for me. All right. Anyway, that's about it from me.